Rising interest rates, high S&P valuations, lockdowns across the U.S. are easing, but does the vaccine work? Europe is seeing cases rising. COVID variants are emerging, and maybe or maybe not the vaccine helps. Is there a wave 4 COVID thing coming in the U.S.? Housing prices are incredible. Energy prices are rising. And we're supposed to figure out what's going to happen in the market and how we're going to trade that. It's like a Rube Goldberg machine that I'm showing here with so many moving parts that it's nearly impossible to figure out. So, what do we do? Hi, Dean Jenkins with FollowMeTrades.com. I'm going to try and offer some insight here and I'll tell you what I'm doing and see if that helps. Well, all I know to do is to retreat to reality and really just study what the market is doing and use technical analysis to project probabilities of what it's going to do next and not try to guess or impose thoughts about what it should do next. So here's a daily chart of the S&P 500, and early last week it put in all-time record highs and then retreated down to a resistance level at the Ichimoku cloud above the 50-day moving average. So technically we're still in an uptrend, right? It's a series of higher highs, higher lows, higher highs. So far, higher low. Now, there's plenty to worry about here in terms of a potential correction. If you follow the news like I do, I'm a total news junkie, right? There's some interesting things, right? We can look at S&P 500 historical price to earnings ratios. Well, it's very high. In fact, it's more than double the historical mean. And you can see when it's gotten high before, it's corrected. So that's interesting. What about, you hear a lot in the news about interest rates, when I hear about changes in values for data like interest, I want to see a chart, right? Well, this is a dramatic chart, right? In terms of the interest rates rising this year, right? That is a huge increase, and that's being attributed to the pullback primarily in the NASDAQ, tech-heavy growth kind of stocks, right? That's a huge growth, right? So we got interest rates rising, making growth stocks presumably not as attractive. We got the valuation of the market at a very high level. Pretty much the expectation of a full recovery already built in. Okay, we got that. I like looking at sectors. It's pretty interesting. Here's we can, and it's a great tool, the sector spider ETF thing, right? If we look back over a week, right, energy got crushed. Let's look at a month. Energy was rocking, right? The price of oil was going up, and we got banks going up, and consumer staples. There's a kind of rotation into more cyclical consumer staples, discretionary, out of tech, right? Tech getting beat up. And then you zoom in on a tighter thing. Wow, oil got crushed, right? Some of these techniques just are hard to apply. And we have also the idea that the stimulus checks, the bill's been passed and a bunch of money's coming to people's hands, and people are saying they're going to put a bunch of that money into the market, so that could be something disruptive. But let's not forget the valuation levels here. At some point, valuation, Benjamin Graham, the father of value investing, said, in the short term, the market votes. In the long term, it weighs earnings, right? And there's a mean here, and the mean's gone up, but it's still, somewhere here around 25-ish, and we're a long ways away from that. And it's going to take really big earnings to sustain that. So, we should expect a correction at some time. That would just be reasonable. But we have to wait. We have to be patient. And meanwhile, we're putting in new highs. So, my approach here is to, be very cautious, to trade the realities of what's going on individual stocks, to run with fairly tight stops and to expect some volatility until something bigger happens. This week coming up, we don't really have any big news. I look here at the Forex Factory. It's pretty good. It's a great calendar showing the upcoming economic reports. Right, we got some Fed heads talking. They've already really kind of said what they're going to do. Right, they're going to let inflation run. They're not going to be aggressive with interest rates. And we got existing home sales. That's kind of important. More Fed heads talking. GDP. That's going to be interesting. There's ideas that GDP is going to really take off. We'll see if that happens. Unemployment numbers. Nothing earth-shattering coming up in the financial report. So, I've heard one analyst, it was a good comment, said, we're not going to have a bear market, we're not going to have a bull market, we're going to have a bunny market. It's going to hop along, right, up and down, up and down, up and down. It could channel. That's true, and so the opportunities may be found in the hops, right? If there's going to be a channel, you can, once it's at the high, pull it back. Like if you look at the S&P, this could be a channel here, right? So okay, it's reversing off the high, take it to the bottom, it's going to go up. That's a trading opportunity, and some individual stocks are doing that. Some sectors are doing great. I'm particularly interested in gold. It's not quite ready yet. Gold and gold miners. Energy was up really strong on increased demand. Now there's discussion about what the Saudis are going to do. They're going to increase production. They're going to open the spigots, basically, let more oil out, or they're going to constrain it and try to keep the price up. OPEC, they don't always keep their word on what they're going to do. So it's just a difficult time. Trading in the market's never easy, but this is a particularly difficult time. There are opportunities, and I think they are in individual stocks, and I'm steering clear of what they call the meme stocks, GameStop and all that stuff, GameStop, where people, that's gambling. And by the way, there's several articles that are interesting about cryptocurrency, Bitcoin, etc., that say, that actually is speculative, which is another word for gambling, right? Because there's no underlying value at this point. It's not based on any hard asset like gold. So I'm avoiding gambling. I'm not speculating, and I'm expecting volatility and maybe a relatively narrow trading range, and at some point in the future, a reasonable, normal market correction. If we go to a higher time frame here, go to a monthly chart, right, on the S&P 500. Well, that's a pretty incredible run up, right? It would be normal, it would be healthy, it would be expected to get a bit of a pullback, and that could be an opportunity, right? We can make money when the market's going down. So I'm keeping a fair amount of capital on the sideline, looking for a big move, and meanwhile trading individual stocks that have clear setups and that are either benefiting from the current environment or getting hurt. And there's some good opportunities out there. So I hope that helps. It's just some thoughts on the market, and we may have more kind of sideways bunny hop in the weeks and maybe months to come. But there will be a big correction, and it'd be good to be poised and have some capital available for that. That's not a doomsday prediction. That's just a normal, healthy part of the market cycle, and we've come a long way up from the bottom, right? So stay tuned. If anything gets clearer, I'll certainly send an update, but that's it for today. Thanks. I welcome your comments and your feedback. Try to respond to everyone. Take care. Trade safe. It will not be boring. Thanks.